This episode is presented by Avalara.
Hi, this is Amberine Tubasi, CFO of Airtable, and you are listening to the CFO Thought Leaders podcast.
This is episode 906.
We've got an incredible business, but it's time to get to profitability. So we've had to make a lot of shifts in our strategy to accelerate that and feel really good about the work that's being done. But that is number one for me. Get to the Holy Land, profitability.
Hi, it's Jack. On today's episode, we speak to Taryn Aronson, CFO of Tovala. Back in 2011, the buzz surrounding the launch of Redbox's Blu-ray disc rental business was getting increasingly dour. For Taryn Aronson, who had been hired to help execute the firm's digital content strategy, the performance woes of physical discs were not anything to lose sleep over. However, the negative notions surrounding Blu-ray's lackluster performance drew Aronson's curiosity. According to the buzz, the root cause of Blu-ray's performance blues at Redbox was that Blu-ray was a low-margin business. That just didn't cut it for Aronson. You'll hear that story and much more on today's episode.
This episode is presented by Avalara. That's the sound of not worrying about sales tax compliance. Because when you automate it with Avalara, you don't have to worry about collecting sales tax or tracking who and what is tax exempt. With Avalara, you don't even have to worry about new tax laws and regulations. Avalara does it for you. If your business sells internationally, Avalara has you covered with cross-border tax compliance solutions. And when it comes time to file tax returns, Avalara automatically takes care of that too, giving you one less thing to worry about. Avalara has managed billions of sales for small, mid-size, and enterprise businesses, and seamlessly works with your current sales, e-commerce, and accounting platforms. Take the worry out of tax compliance with Avalara. Learn more at avalara.com. That's AVALARA.com.
Hello, we're speaking to Taryn Aronson, CFO of Tovala. Taryn, welcome.
Thank you.
So, Taryn, we always begin by asking our guests to look back for us, and we're looking for those experiences that you've had that you feel prepared you to become a finance leader. Can you go back in time for us and identify what were those?
Sure thing. Happy to. And again, thank you for having me. Great to be here today. I think there's a few key experiences that stand out for me. I'd say the first was my first job out of college was an investment analyst at the Blackstone Group. I was a generalist. It was an incredible training ground and really understanding fundamental analysis of businesses. And I remember pretty vividly that first week on the job, we had an orientation meeting with one of the leaders of the Blackstone Group who sat us down and gave us a speech about what it means to work at Blackstone and the expectations. And he started asking some questions about where we went to school and, said, if you're here today, probably got really good grades, A GPA, maybe an A minus. So that means that about somewhere between 92% and 95% of the time you were correct. Here at the Blackstone Group, if you're correct 95% of the time, we lose hundreds of millions of dollars. And that speech really stuck with me for a few reasons. I mean, it was clear the standards of excellence were very high, and I wasn't in college anymore, and there were real implications of the work we were doing. But I think it also for me started to create mental models for me around that have evolved and developed over time around when is accuracy critical? When is precision critical? When is good enough to make the decision that you're making? And I think understanding the differences between those has been really important to me as a leader in building out my finance teams, so that particularly in a startup world where we have to operate in a very resource limited setting and can't always, putting in the hours is not going to be enough to get the perfect analysis done. You have to be comfortable making decisions with less information. So that I'd say was a very formative experience early in my career. The next one for after Blackstone Group, I moved over to a strategy and business development role at NBCUniversal. And the first project I got assigned to, fortunately, was on the deal team that built what ultimately became Hulu. And that was really an incredible experience for me for a lot of reasons. The energy around building something new, with a small group of people who were going against the odds and building something that was going to cannibalize the core business and everything that, wrapped around that, the implications of that, very exciting for me and gave me the entrepreneurial bug and love for building something new and disruptive. So that was, that really defined, I think, a lot about my career trajectory and what I looked for in my opportunities, throughout my career.
Well, that's a nice overview for us of that early chapter, and I think it's interesting that this sort of video media realm remains your career lane for a number of years, and I'm hoping you can share where you're headed here with us. It's a name, a brand I think many will know.
Yeah, I think the third experience that really stands out for me was, my next job after business school at Redbox, the movie rental company. I served a lot of roles there, and that really, didn't start in finance, but ultimately got back into finance role at my last 2 years there. But I remember one moment that stood out to me and defined who I became as a finance leader was when I was in a finance role, leading the finance function for Redbox. A new board member joined our parent company and met with me. And after that meeting, I got some feedback from my boss, who was the CFO of the parent company, that this board member wondered whether I was enough of a a-hole, hopefully that's okay to say on this podcast, to be a CFO. We control the purse. We have to make a lot of hard decisions. We have to say no a lot. And this board member wondered if that, fit with my personality and would enable me to be successful. And that feedback really stuck with me for a long time and affected my confidence about whether I could be successful as a CFO. And over time, as I eventually, moved over to Tovala and from the ground up, got to mold my position as CFO from the beginning. What I realized is that there isn't one personality type that can be successful as a CFO, and a true leader leans into their strengths to set them up for success and drive impact and win. And for me, what I found for some of my greatest strengths are going back to my roots. I deeply understand our business levers and how they work and interact, and I have built very trusting relationships with all of my operating partners at the company, which helped given that I joined so early. And I lean into that to work with them in partnership to drive decisions and problem solve together, as opposed to being an a-hole. And so I think that, that was a pretty important moment for me in defining who I am as a finance leader.
We want to ask you about the decision to go back to business school and whether you were looking for a way perhaps to reinvent yourself in some way or get yourself focused. And of course, we're interested in whether this was about getting you focused on finance. What would you tell us?
Yeah, that's a great question. I'd say when I initially applied, I didn't know. I think I mostly was motivated because it was what a lot of people with my background did. I didn't really know exactly what I wanted the future of my career to be, and felt like, particularly after 3 years at Blackstone and 2 years, working on this intense project, I was ready for a little bit of a break and a reset to assess where to focus next, um, and and take some time where my only responsibility was to myself, and not my colleagues or customers or other stakeholders. And so I had done finance undergrad at UPenn, the Wharton School. So I wasn't really looking for more finance training per se, but wanted to focus more on the leadership skills, and softer management skills, and then figure out where to focus my energy. And I think Kellogg was a great place for me to do that and learn more about marketing. I spent very little time learning about marketing at undergrad, and learning about the science behind marketing also, I think, was pretty important for me.
I also thought it was interesting the role you sort of step into at Redbox. It's not a traditional finance role. It seems like you're very much involved with the content. And was that the case at Hulu as well? Or tell us a little bit about that.
Yeah, that's a great question. Yeah, so at Hulu, I was much more initially focused on the financial model. I ran the model, and that gave me, because of that, I got access to a lot of meetings that I would not have otherwise been invited to with, Bob Wright, Jeff Immelt, powerhouse leaders in media. Got into the boardroom and got to see how decisions were really made. And that was, I was very early in my career, pretty junior, but because I was the one who knew how the model worked and could answer questions, I got access and experience that, was very interesting, and I learned a lot, and frankly learned how much influence you can have when you understand the numbers. And so when I went to Redbox, actually, it was a strategy role initially for digital media. So they were looking to launch a digital service, and that's what I had done, obviously, previously. So thought that was a great fit. It wasn't focused particularly on content, but was fortunate that they brought in a new executive who was responsible for all content at Redbox, the physical and digital. And she really took me under her wing. And so while I continue to work on the digital strategy, I got exposure to our content strategy for our core business as well, studio negotiations, analysis around optimizing the mix of content in the kiosk, things like that.
Yeah, but at Redbox, and again, you were at Redbox for nearly 6 years. You come in one end as their digital strategy person, and out the other end as a finance executive, as a senior finance executive. So what happens exactly? Is someone saying, we could really use you more over here? I mean, what happens exactly? Yeah.
Yeah, I think it was a combination of, a little bit of how I'm wired to raise my hand for opportunities for myself, and I think through my time there, built relationships with other executives on a variety of projects that positioned me well. I mean, finance was my roots, and I'd always leveraged it to help me do my work and drive impact and drive decisions, but I wasn't planning to go back into finance. It was a bit of, I think, somewhat of a, opportunistic situation where the head of finance left, and I had a close relationship with the CFO of our parent company, who had previously been the CFO of Redbox, and we worked really closely together in the content role, on studio negotiations and any deal negotiations, as well as on our digital strategy. So when he was looking for a new head of finance, there was a natural fit there.
Now, we want to ask you about Tovala, but I want to point out that you joined Tovala from Redbox, and you step into a chief operating officer role. So you were an executive that was viewed as having a very broad set of skills, not necessarily finance alone. So can you tell us how the Tovala opportunity came forward?
Yeah, great question. So when I first met David, our CEO, I think when I was leaving my time at Redbox, I was starting to feel I had a great experience at Redbox. I learned a ton. I worked with incredible people. But towards the end, the business was maturing and declining. And in my finance role, I think I did a lot of great work there, but was starting to feel like I was pushing paper back and forth and really missed that entrepreneurial bug of building something from scratch and bringing something new into the world. And so to me, that really drove my desire to do something where I could get my hands a little more dirty. And I associated that with operations. And when I met David for the first time, I got introduced to him through a former neighbor of mine, and he told me about what Tovala was doing. And I know we'll get to that. They're building an oven that's going to cook you dinner, and that really resonated with me as a consumer. I want to eat well. I want to feed my family well. I do not know how to cook. Nobody wants me to cook. And so, he had me at Hello, and I met with David and said, well, here's all the things I've done. What do you need? And he said, well, here's what we need. And they didn't have any finance people. And so I was happy to leverage those skills and play that role. But I was more interested in getting my hands dirty on some of the operations. So other than partnering with the ops team at Redbox and in other places, I didn't have any real operations experience. I took an ops class in business school. I had no experience in food manufacturing. So there was a ton to learn. But it was a great team of people that I got to partner with and really leverage what I had done before, which was take a new concept and figure out who do I need to talk to and brainstorm with to get from here to there. And that was really kind of my role in operations, was to help figure things out, what needed to be done, by talking to the right people. Once we got big enough where we needed to scale the operation, and have people who knew what they were doing, we brought in more talent that were much better than I at figuring out how to run an efficient operation.
I just want to point out, you were in the chief operating officer
Position
for more than 6 years. I mean, you learned the job well. You've been in the CFO office since 21. So likewise, you've made an investment of career years with this one company. I think it's an interesting company. We haven't had too many food tech CFOs on before, so looking forward to talking to you. Tell us about Tovala. What does this company do? What is the offering?
Sure. So Tovala provides a meal service that we ship directly to customers' home. And what makes us different than all other meal services out there is that we also provide a countertop, internet-connected smart oven that cooks the food for you. And so we pre-program all of the cook cycles, and every recipe is designed in partnership with our chefs to figure out exactly how to cook a set of ingredients perfectly at the same time in the oven. We ship the ingredients, they arrive fresh, and the customer may put on just a little seasoning, do less than a minute of work, scan a QR code on the oven, and then the oven cooks it perfectly for you.
Tell us about the company a little bit in terms of its evolution of its capital structure. Is it privately owned today, clearly, and has it raised money in the past? Yeah.
Sure. Yeah. So we are a venture-backed company. So we've raised over $100 million in venture capital, and as well as some venture debt. And so when I joined in 2016, we were in the seed stage. We hadn't launched the business yet, and so we had raised a small amount of capital then, and the team was in Y Combinator. And then, so over the years, we've done a series of fundraises to.
So is the customer actually buying an oven from Tovala?
Yeah, so that is, we sell a meal solution, but one of the first steps is to buy the smart oven that we sell at a nice discount when you commit to ordering food from us, and then there's a weekly subscription for meals delivered to your home.
And who is the customer here? Someone who's very busy, someone who works different hours? I don't know.
Yeah, that's right. I'd say our core customer that we design for and target is what we call an optimizing foodie. They, live very busy lives. They want to eat well. They don't have time to cook. But I think what's interesting is that core customer group has a very wide variety of demographic profiles. You've got your young professionals, you have your empty nesters that are tired of cooking, you have your solo diners that don't have other great solutions because cooking for one, frankly, sucks. Shift workers, people with disabilities. So a really wide range of people that fit that profile that want a convenient food solution that tastes great.
So there's also a weekly food delivery, or how does that work?
That's right. So we have menu options each week, over 20 options that you can pick from that will be delivered to your home. You can pause, skip weeks at any time. And then the oven can also be used to cook your own food as well. So it has 6 different functions. It replaces your toaster, replaces your air fryer, and is great for a variety of different cooking.
And yeah, so it allows you to get creative as well. You would think that you can introduce new approaches or meals or what have you, and have the software that controls the oven in some way be enhanced. Is that right?
That's right. That's right. We do have some recipes in our app that you can use to cook different things, make scallops at home, asparagus, chicken nuggets for the kids. And then we also give the customer the opportunity, they can build their own cook cycle. So, more of the pro users, if they want to use steam or the air fry function, the magic of the oven is that it automatically can change temperature and change cook cycle so that it gives a great result depending on the type of food that you're trying to cook.
It seems to me like this would be appealing to someone who's familiar with food kits but doesn't want to spend all the time cooking or thinking about how to cook. The oven would be easy to operate.
Yes, absolutely. A lot of our customers have tried a meal kit in the past and found that they liked the concept, but it was too much work. And those, so it's not as much the active meal kit customers that are still using a HelloFresh or a Blue Apron to send them ingredients and teach them new recipes every week. That it's a very different value proposition. But for us, all of the people that tried those services and it wasn't a fit for them, but still want to eat well and want a convenient meal, those are great target customers for us.
Again, coming from the operations side into the finance function, you probably had some ideas of how the finance
Function needed to operate.
but maybe there were some modifications given your operations background, certain metrics that you paid closer attention to than others. I don't know. Can you tell us a little bit about whether you reorganized finance or you made another hire of some kind? Don't know.
Yeah, great question. So actually, when I joined Tovala, while I did have the COO title, I was still responsible for finance as well. And so I did walk into a situation where there was 0 finance personnel, and I was building everything from scratch. So that was pretty easy to mold what I wanted the future to look like. And there was a lot I didn't know or hadn't done before. I had good experience in FP&A. I had done a fair amount of not fundraising from venture capital, but fundraising from internal stakeholders, and had good experience there. But and took accounting classes in college. I did not have accounting background, and so definitely needed help. And did hire someone a few months after we launched, initially as an intern and then eventually full-time. And he's still with the team today as our VP of Finance, who played a huge role in helping me build out all of our models, all of our functions, all of our KPIs. And that's been a huge help.
Can you share with us what are those KPIs? What are you looking at? What metrics?
Yeah, I think, there's that, the obvious ones on the revenue side is a subscription business. We look at our recurring revenue run rate is important. And then most importantly, from day one, it's our customer retention. So as a subscription business, and our value proposition at Tovala, what really sets us apart is that our retention has always been multiples higher than anyone else in the world delivering food. because we do hit on a core need of humans that want to eat well and don't want to do the work or unable to do the work. And that oven sits on the countertop as a constant reminder of that value proposition. And so at a high level, our retention rate is critically important. But then what's also critically important is digging into all the drivers of that and understanding what is affecting customer behavior for different cohorts.
Now, are you collecting data from the oven users or your customers clearly? I mean, you can understand, like is all that data being fed into your data systems and networks? Yeah.
Yes, yeah, that is correct. That is also something that differentiates us from other meal services, is that we do collect a ton of data points of every interaction that you have with the oven, a lot of information about, the cook cycles of the oven. And, we can use that both to troubleshoot any problems we have and feed into our R&D process for the hardware in the oven. But more importantly, understand what people are cooking, when they're cooking it, how they, how they're, interacting with our product.
Now, I mean, the customer pays for the oven. You don't give the oven to them. I mean, am I right about that? I know there are different models, but
most of the time. So we heavily discount the oven, and so it's a very high quality of smart oven, that would compete against other products that are being priced, in the $300 to $500 plus range. So for us right now, when you buy the oven, we have two different SKUs, but you can get it for $99 when you commit to ordering six weeks of meals. And then we will run sales. We have done some experiments with lower pricing. And what we found, we didn't launch the business that way. We launched at a higher price point, but what we found was that as we experimented with lower upfront pricing, our customer base was so retentive that we were highly confident we would earn back that money in meal profit with very high confidence, and that's enabled us to lower the upfront barrier to the sale.
now have you raised money since you stepped into the CFO office, and is that something you expect to do in the next 12 months?
Yeah, so I was involved in every capital raise since I joined in 2016. So we've done several rounds and worked very closely with our COO in that process.
We'd love to touch on AI with you. And since late last year, when ChatGPT started grabbing headlines, many finance leaders
Perhaps hadn't really thought hard about it. Others were already involved with AI in some fashion. I suspect this sort of being certainly a technology company, there have been conversations for quite a while about how it could impact your business or how to leverage it in this business. Just curious about your latest 6 months. Is AI part of it's certainly part of the discussion. Is it part of the business yet? Are you leveraging it in some way?
Yeah, I'd say it's definitely part of the discussion. I think where we are using it most today is to synthesize a lot of data faster, particularly when it comes to customer feedback. We've got all the Zendesk tickets, right? And being able to scrape that information and make sense of it, in a valuable way is one application that we've been talking about, and how to get information about our product offering and customer perception of it, what competitors are doing, I'd say is the lowest hanging fruit for us and how we've been utilizing it. But we are regularly talking about across the business how we can lean into it more in a smart way and a careful way, understanding that the tools are still being refined, and have to be careful how we use it. But do think there's a lot of opportunity for us to accelerate learnings about what our customers want and how to best deliver that to them.
Well, thank you for that. We are going to jump to our finance strategic moment question, where we ask you to take a look back in time once again and cherry pick out for us perhaps one moment of strategic insight that you experienced because your lines of sight looked into the numbers and you could see something, whether it was a risk or an opportunity, and that was pursued, or something you stayed away from. Don't know, but what comes to mind when we ask for a finance strategic moment?
Sure. The one that comes to mind for me is something that happened when I was at Redbox, which was the launch of Blu-ray for Redbox. So Blu-ray was at this point, early 2010, 2011. Blu-ray had been around for a while and was had a decent market share for other relative to SD for other video providers. But for Redbox, it came later and was kind of a black sheep. So the launch didn't go great, and the perception internally was that it was low margin and bad, and that we shouldn't invest more in Blu-ray. And that, frankly, just didn't make sense to me because it wasn't a demand problem. When you looked at the data on all other video services and what their mix was, we were well below. And Redbox was one of the biggest providers of video at the time. So we didn't have a niche customer base. We were America. And so I did dig into the numbers a little bit more and try to understand what was going on. And what I realized was, part of the misconception was in traditional retail, typically your cost is fixed. And so if you keep your price the same, which we had set a price for Blu-ray, your margin is fixed. But in rental, that is not the case. The driver of your profit is your turns. How often, how much inventory do you buy, and how many times does it turn in the kiosk over the life of that product? And so we control margin. It's not set up front. So it didn't fundamentally make sense for someone to say that Blu-ray is lower margin than SD. And so, I realized more that the initial results, while not stellar, was more of a function of our strategy and execution, of how we bought the product, how we allocated it to kiosks. That is what drove the lower profit. And so I went on a bit of a crusade to educate others on the true economics of SD versus Blu-ray and how we could take the learnings from the first launch and try to optimize that and be smarter about how we buy Blu-ray, how we allocate it, and how we iterate, constantly iterate that based on the turns that we see for different types of product in different geographies. And that ultimately, I got people on board with that. It ultimately drove a ton of incremental profit for Redbox at the time. And for me, the key takeaway from that moment was really understanding the role of finance and how we can leverage data to help make better decisions across the business. I think it's known that good teams have clear KPIs. They understand their metrics, and they come up with good plans of how to execute to hit those metrics or exceed those metrics. From my perspective, it's not always that clear cut. There's interaction between metrics, your growth metrics, your profitability metrics, your operations, inventory management metrics, that critically important that everyone on the team understands how those metrics interact and how to make smart trade-offs that will ultimately increase value for your business. And so that to me is what defines a great team, that they are thinking holistically about the interaction between metrics. And I view the role of finance is to help our teams understand that. Our growth team wants to drive sales, but they need to understand, how the things they do with price and marketing affect, what are the types of customers they are acquiring, what is their lifetime value, and what implication does it have on our operations of, how profitable those customers will ultimately be.
From episode 850, this is 1 Minute with Anat Ashkenazi, CFO of Eli Lilly.
And I think the combination of strategy and finance that's the intersection that I enjoy the most, which gives you the ability to think about both the short term and the long term, but all in one continuum. You're not trying to maximize one over the other, but you're trying to maximize both for the firm over the long period of time. And that's what I found over the years most exciting. So before I took the CFO role, I had a dour role, and I was the controller. So I had all of our global CFOs in my organization, accounting, external reporting, etc., but also served as the chief strategy officer for the firm. And that gave me a really unique and broad perspective on the business before stepping into the CFO role. But it's that in that intersection.
We are going to jump to our mentoring round where I'll ask you several quick questions intended to inform and inspire future finance leaders. We'd like to know, and this should be interesting, we described how you had really done the COO tour of duty for more than 6 years before you stepped into the CFO role. Strangely, we always get it the other way. Lots of CFOs who kind of move over and take on the COO responsibilities. We don't always see it going this way. But we wonder about your first 30 days in the role, the first 60 days as a CFO, whether, if you could just give yourself a piece of advice. There must have been something that surprised you. Well, this is a little different. Didn't expect this. I don't know. But when you think back to your first 30 days with that title and all the added responsibilities it brought, what would you tell yourself? What is it that you might have told yourself?
Yeah, it's funny when my third child was born right in the middle of our Series A at Tovala. So not long after I joined Tovala and was, I had technically had responsibility for finance when I first joined, but when you're launching a business, we didn't have any revenue yet. Most of my attention went to ops. And then once we launched, all of a sudden, finance became a bigger part of my mind share in building financial models and fundraising. And so, I think everyone knows, and everyone tells you, how important it is to prioritize. That's obvious. But for me, prioritizing was hard until I had a lot more constraints around me. And, my first child, that was had a big impact in my understanding of what the scarcity of time really meant. And then again, when I took the CFO role at Tovala and had another child and during a fundraise. And so what I wish someone had told me early on was, not just to prioritize, but to help me understand what that meant. Imagine you wake up in the morning and, there's 2 feet of fresh powder on Park City Mountain, where I live, and your company has 3 weeks of runway and you need to close on some capital, and you're going to get a call at 3:00 that your kid got in a fight at school and got suspended. Now prioritize. And I think having that, understanding constraints when you're trying to prioritize would have helped me. And I think now is a skill that I'm much better at, and really try to focus as much as possible on the thing that's going to kill us next. And so my finance function, we're not perfect. I know what good looks like. I've seen great finance organizations at my prior very large, well-oiled companies. We're not perfect, but we know what's most important, and we get that done.
Excellent. Thank you for that. We always like to ask you to reflect a little on the personal side, and you shared a little bit of that with us. But at the same time, we're wondering if you have a habit or a part of a daily routine that you're known for, something that sets you apart. Other people pointed out to you from time to time. You do that. Why is that? Whatever it might be, a personal habit, part of a daily routine, something you're known for.
Well, I think those are 2 different questions. I think what I'm known for is I try, I'm not even always conscious of it, but I definitely bring levity. That is my stress management mechanism, is making jokes, and hopefully, they don't offend people. But it is my way of leading a startup is a roller coaster in the best possible way. There's a ton of thrills. I think everyone knows this. And I have to find my way to manage that stress and all the stress around me. And so I try to use humor.
Would you have a book recommendation for us? It might be something you escape with. It might be something related to business. Doesn't matter. Anything you can share?
Yeah, it's funny. We actually have a tradition at Tovala that started with our CEO from day one, which, he gave everyone on the team around the holidays a book as a gift. And we've continued it now. We've got hundreds of employees. And so every people manager at the holidays buys a book for their direct reports. For the finance team, I always buy people. The first book I buy is Bad Blood. There is in my opinion, a very thick line between presenting the best version of yourself for investors and misleading investors. And it's important to me that everyone on my team understands that line and doesn't cross it.
Excellent. Thank you for that. We're up to our final question, where we're going to ask you to look forward finally. And speaking of priorities, we'd like to know what your priorities are as CFO for the next 12 months. What are those?
Profitability. Get to the Holy Land. We've been dependent on other people's capital from day one. We've got an incredible business, but it's time to get to profitability. So we've had to make a lot of shifts in our strategy to accelerate that, and feel really good about the work that's being done. But that is number one for me.
Taryn Aronson, thank you for joining us on CFO Thought Leader.
Thank you.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at cfothoughtleader.com and, of course, our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.